On February 27, 2025, Bitcoin and the entire cryptocurrency market took a big hit. Prices dropped faster, causing panic among investors. Bitcoin lost nearly 4% of its value, while Ethereum and other major cryptocurrencies also fell sharply. But what caused this sudden crash? Let's break it down. The three main reasons caused the crypto market to fall. Number one, big investors pulled out. Large investment funds called ETFs pulled over 755 million out of the Bitcoin in just one day. When big investors sell, it can shake confidence in the market, making prices drop further. Some experts believe institutional investors are locking in profits. After Bitcoin's rally over the past few months, others suggest concerns about economic uncertainty are driving them to safer assets like gold and the US Treasury bond. The economic problems and the new rules, global events also played a role. US President Donald Trump announced a 25% tariff on goods from Europe, making investors nervous. The trade wars often cause market instability, and cryptocurrencies are no exception. At the same time, many governments are still figuring out how to regulate crypto. The European Union recently discussed a new tax or digital asset, while China continues cracking down on crypto mining. When rules are unclear, people get worried and start selling. The technical breakdown, Bitcoin's price fell below an important support level. This triggered automatic sell orders, causing prices to drop even faster. If Bitcoin falls past another key level at 74,000, it would trigger another wave of selling, pushing prices even lower. But if it holds above 85,000, some analysts think it could bounce back quickly. The damage was widespread. Bitcoin dropped to $81,087. It's the lowest price since November 2024. Ethereum fell 7% to $2,350. Altcoins like XRP, Solana, and Cardano also took massive hits, with losses between 6% and 12%. Over 4 billion worth of crypto trades were liquidated, meaning investors lost money fast. The Fear and Greed Index, which measures market confidence, dropped to 32, signaling that fear is dominating the market. The last time the market experienced this level of fear was during FTX collapse in 2020. In FTX collapse in 2022, when people panic, they tend to sell first and ask questions later, which makes the drop even worse. So will crypto prices recover? Experts are divided on what happens next. If Bitcoin holds steady between 85,000 and 90,000, it could bounce back and continue its long-term growth. If Bitcoin falls below 85,000, it might drop all the way to 74,000 or even lower. Some investors believe that this is just a normal correction and Bitcoin will rise and again soon. Others think the worst may not be over yet and further price drops could be coming. So what should crypto investors watch for? Institutional investors, if big investors keep selling Bitcoin, could drop further. The global economy, any new economic crisis could make things worse for crypto. Government regulations, new rules on crypto taxes and exchanges could shake up the market. The US interest rates, if the Federal Reserve raises rates, riskier assets like Bitcoin could continue falling. This crash is a reminder that crypto is risky and prices can change fast. But history shows that Bitcoin has survived major drops before. In 2017, Bitcoin hit 20,000, then crashed to 3,000 before rebounding years later. In 2021, it hit 69,000 before dropping to 16,000. And in 2022, only to recover and set all new highs. Whether it's just a bump in the road or a bigger problem remains to be seen. So what do you think will happen next? Leave a comment below and let's keep the conversation going. Thanks for watching.